What's going on, everyone? Welcome back to Money Moves episode 4, and we will be talking about all the money that's moving around into different parts of the technology sectors. So let's dive in and talk about it. E-Plane looks to ride the Indian government's interest in air taxis with new $14 million round. The E-Plane company, founded by IT Madras aerospace engineering professor Satya Chakravarthy in 2019, is building its electric vertical takeoff and landing vehicle, the E200X, several months after developing unmanned drones for cargo and camera applications. The startup aims to commercialize its electric air taxi in the middle to second half of 2026 after securing the required certifications from the Indian and global authorities and prototyping the aircraft in the first half of 2025, Chakravarthy told TechCrunch. Ahead of testing the vehicle, E-Plane has raised a $14 million Series B round co-led by Special Invest in Singapore's Antares Ventures. The all-equity round also included participation from Macilio Mobility, Naval Rescant, Java Capital, Samarthaya Investment Advisors, Red Start from the Curie, and Anycut. The round has valued the startup at $46 million post-money, over 2x its previous $21 million valuation. The fresh capital will help E-Plane, which has a workforce of over 100 people, secure global regulatory certifications and boost its commercialization efforts. Chinese autonomous driving startup Pony AI seeks up to $224 million in U.S. IPO. Pony operates a fleet of 190 robo-trucks in Beijing and Guangzhou and more than 250 robo-taxis in Beijing, Guangzhou, Shenzhen, and Shanghai. The company told TechCrunch it can charge for robo-taxi fares in all 4 cities and is fully driverless in Beijing, Guangzhou, and Shenzhen. In a filing on Thursday, the Chinese self-driving technology company said it plans to issue 15 million American depository shares with the possibility of issuing 2.2 million more if demand is high at an expected price range of between $11 to $13 per share. At $13, that would value the company at $4.48 billion based on a 344.9 million shares outstanding immediately following the offer. Pony once had a valuation of $8.5 billion following the close of a Series D round in 2022 in which Toyota participated. Pony's debut is the largest in a string of Chinese companies going public on the U.S. stock market after a multi-year ban from Beijing on offshore capital raising. Pony will list on the Nasdaq under the ticker Pony. And more Money Moves news. Ericsson invests $456 million for quantum tech research in Canada. Ericsson and the government of Canada have expanded their partnership with a substantial funding increase, with Ericsson committing $456 million to research facilities in Ottawa and Montreal. This investment aims to accelerate advancements in AI, quantum technologies, 5G Advanced, 6G, Cloud RAN, and Network API technologies while creating and upskilling jobs and internships. Ericsson's Canadian research and development facilities have a key role in the company's global innovation strategy, particularly in quantum and AI-driven network management. The Montreal Center will lead quantum computing research through Ericsson's Quantum Research Hub. This initiative also strengthens Ericsson's partnerships with more than 20 Canadian universities, fostering talent through nearly 600 co-op positions over 5 years. The announcement underscores Ericsson's commitment to technological innovation in Canada. In 2024, the company announced a new 10-year agreement with Concordia University to advance research and talent development in information and communications technology and launched the Ericsson Carlton 5G Drone Lab. In the next Money Moves news, Starfish Space raises $29 million to launch satellite servicing spacecraft missions. Starfish Space has closed a new tranche of funding led by a major defense tech investor as it looks to launch 3 full-size satellite servicing and inspection spacecraft in 2026. The Washington-based startup's Otter spacecraft is designed for 2 primary missions: extending the operational life of expensive satellites in geostationary orbit and disposing of defunct satellites in low Earth orbit. It's a series of capabilities that have never been available for satellite operators who launch their satellites with the expectation that they'll only have a limited span of useful life. The $29 million round was led by Shield Capital, a venture firm focused on funding technologies that will affect U.S. national security. It has participated in just a handful of other deals in the space industry. This round also includes participation from new investors, Point72 Ventures, Booz Allen Ventures, AeroX Ventures, Trousdale Ventures, Track VC, and existing investors Munich Re Ventures, Toyota Ventures, NFX, and Industrious Ventures. Starfish launched this demonstration mission, a subscale spacecraft fittingly called Otter Pup, last summer. Although that mission did not quite go according to plan, Starfish has racked up several wins since then, including 3 separate contracts for full-size Otter spacecraft. That includes a $37.5 million deal with the U.S. Space Force for a first-of-its-kind docking and maneuvering mission with a defense satellite in GEO, and a contract with major satellite communications company Intelsat for life extension services. The third contract, a $15 million NASA mission to inspect multiple defunct satellites in LEO, was announced while Starfish was in the middle of fundraising. Up next, we have Tesla raises $125 million at a $500 million valuation to build AI that writes and maintains code. Tesla is building what it describes as an AI native platform that developers and their teams can use to create and maintain software, and it opened up a waitlist for those interested in trying it out. Tesla's product has yet to launch, and the plan is to have it ready early next year. But the London-based startup is now sharing a bit more about what it's doing with some financial fanfare. Tesla has quietly raised $125 million across a seed round and a Series C/A, both being announced for the first time. The latest round is led by Index Ventures, with Excel, GV, and Boldstart participating. GV, Google Ventures, and Boldstart co-led the seed round. TechCrunch has confirmed with multiple sources that Tesla's post-money valuation is north of $500 million, specifically $750 million. Tesla will initially aim to support Java, JavaScript, and Python, and it would add more languages over time, CEO Pujarni added. Germany's Clem raises $22 million to take its regenerative farming platform international. Regenerative farming is often touted as one way to make progress towards several sustainability goals, as it offers farmers an opportunity to reduce carbon emissions while increasing biodiversity and enriching soil. Berlin-based agritech startup Clem is working to get farms to switch to regenerative farming more easily and to help expand its operations internationally. The startup recently secured a $22 million Series A funding round led by Europe's largest bank, BNP Paribas. Notably, the round is one of the largest raised by agritech startups in Europe this year. With Clem, farmers get tools to plan, execute, and finance the transition to regenerative practices. This includes data on restoring soil health, biodiversity, capturing carbon, and reducing emissions. Farmers can also use Clem's platform to track the progress of their transition and prove it to supply chain partners, enabling them to earn revenue payouts for sequestered carbon. In more Money Moves news, Dutch startup SimPower secures 21 million euros to balance out the energy grid. Amsterdam-based startup SimPower has secured 21 million euros as it looks to scale its grid balancing technology. SimPower partners with businesses that use a large amount of electricity. It gains access to some of their energy assets and can turn them on and off when the grid requires balancing, a process called demand response. SimPower's software platform uses AI to analyze data and optimize when and how much power businesses can sell at any given time, making energy use adjustments more effective and profitable for all parties. Grid operators pay SimPower to stabilize the energy supply. The company passes most of that payment to participating businesses, keeping a small service fee. The system gives energy-intensive companies an incentive to stop using electricity during peak times of peak demand. The more energy they save, the more money they make. The idea is to help prevent blackouts and the strain on the grid. A&G Energy Transition Tech Fund led the funding round with direct investments from the European Investment Fund and participation from existing investors Activate Capital, Rubio Impact Ventures, PDE&H, and Expand Capital. Stepful raises $31.5 million to address healthcare staffing shortage with AI-powered training. Stepful is an AI-powered online program that trains people for entry-level healthcare jobs, like medical assistants and pharmacy technicians, in 4 months at an average cost of $2,500. Since its inception, Stepful has grown from having only 50 students in its first year to expecting 30,000 enrollees in 2024. After completing the online courses that are needed, Stepful automatically matches students with one of its 8,000 partner clinics or hospitals throughout the country for 1 or 2 months of hands-on training. Stepful announced that it raised a $31.5 million Series B led by Oak HCFT with participation from Y Combinator, Reach Capital, AliCorp, and others. The funding comes less than 9 months after Stepful raised its $12 million Series A. Then also in Money Moves news, NASA awards Sustainable Aircraft Concepts $11.5 million. So that is just some of the latest Money Moves news, so that way you can know where the money is going in different parts of the technology world. Thank you for being here and watching the video. If you enjoyed it, I ask that you like the video, subscribe, and then check out these 2 videos right here where I keep you informed about the things you should know happening in the world of technology.